Welcome to Trading Nation. I'm Tyler Matheson. Let's dig into the relationship between Bitcoin and the equity market. Check out this chart of the S&P 500 versus Bitcoin. Up until recently, one could argue that the two appear to trade in tandem. Bitcoin, as you may recall, peaked late last year, and stocks topped out shortly thereafter. And then again, the two followed one another in February and March. But our guest today says that although the chart shows some correlation, what you see isn't exactly what you get. Charlie Bilello is Director of Research at Pension Partners. Charlie, it looks for all the world like these two very unalike asset categories perform pretty much alike, but you say the correlation is far from perfect.
Yeah, so if you look at the data, it tells you an interesting story that's very different than what you're hearing out there. So recently you're seeing big declines in Bitcoin and have a number of people saying, well, the equity market should be going down with Bitcoin. And they're saying that because they're looking at last year. Bitcoin was up over 1,000%. It was a great year for the equity markets. And they said, well, they both went up together, and perhaps they should go down together. And we did, in fact, see that for a brief period this year in January into early February. And since then, really, that relationship has collapsed. So if we're looking at from the peak last December, Bitcoin's down over 60%, and the S&P over that period of time is actually up 4%.
Is there some intuitive attraction at putting the two together? In other words, that people always talk about animal spirits driving stocks higher, and probably animal spirits was what was taking Bitcoin higher, and then those animal spirits kind of dissipated earlier this year. I wonder if that explains, or at least is part of the narrative behind the supposed correlation that you debunk.
Absolutely. People think that they're tied because there's a risk appetite in markets. There's certainly risk appetite in Bitcoin, risk appetite in equity, but you really have to divorce that from the actual data. If we go back to 2010, when we have data on Bitcoin, and compare that to the S&P, we're finding a zero correlation over time. Now, this is important. Just because something has a zero correlation doesn't mean they won't move at times in the same direction. So gold and the S&P also have a zero correlation, but you'll see at times gold going up with the market and down with the market. But you have to separate correlation from causation and think about, is there a fundamental reason for stocks and cryptocurrencies moving together? I don't believe there is. When you look at stocks, obviously they're tied to earnings. They're tied to a long-term stream of earnings. Bitcoin is entirely tied to sentiment. What will investors be willing to pay for it going forward? The two are not related. So at times they're going to appear to be moving together in the same direction, either up or down, but I'd be very careful and caution against using that as an indicator for the stock market, saying just because Bitcoin is going down, it doesn't necessarily mean anything for stocks. So be very careful in tying the two together.
All right, Charlie, thanks very much for your insight today. Appreciate it. Charlie Bilello of Pension Partners. Our appreciation to him. And thank you for watching Trading Nation. I'm Tyler Matheson. We'll see you next time.